Happy Monday, everyone. We still have some that are going to be joining us, so we're watching the numbers and see that we have a few to come yet, but I'll just get started so that we don't take any more of your time than we need to. On behalf of the partners and the COVID team here at Boyum Barenscheer, we are so glad you're with us, and we're excited to give you some additional guidance that has come out on the COVID relief package as it relates to businesses and individuals. So with that, what do we have to tell you? Again, same as every other time. The information we're giving you now is the data that's up to date as of today. It continually changes. Banks change things, the SBA changes things, the Treasury changes things. So again, we're in this time of change and flux, but we as a COVID team will always be here to make sure we're updating you as often as we know it. And look at this. Here's our COVID-19 team. Today, I'm not going to forget to talk about who we are. So I am Stacy, the leader of the Business Advisory Services and Client Advisory Services group here at Boyum. Chris and Nick and Barb are the next three pictures. They are also in the Business Advisory Services area. And then Randy, Tiffany, and Larry are also with us today, and they are in our audit and accounting area. So we're pleased to be with you. And with that, we'll get into what our agenda is today, and we're going to bring our MC, Nick, on. He's going to go over some housekeeping items for us so we know what we need to all be doing.
Thank you, Stace. Just very quickly, I know a lot of you have been with us before, so this is old news, but on the very bottom of your screen, there is a Q&A button that we would love for you to post questions to. We will get to those at the end of this and maybe be answering some of them as we go. So if you go down there, you can click and type in your question. If you see the question you have, please give it a thumbs up or an upvote, because then it'll bump it up to the top of our list and we will be sure to get to it. The webinar is also being recorded, and we'll have that up within 24 hours generally. So you can go and watch this again tomorrow at lunch if you want to. And that is actually about it. If you have any questions, please start popping those in, and Stacy will go over the rest of our agenda.
Thanks, Nick. Glad you're with us again today. So what are we going to go over today for you? We'll go over, similar to the last presentation we did, but some updates on the changes in accounting for the existing loans that we all got last year during 2020. Talk about these PPP second draw loans, which are big for a lot of businesses that had affected businesses from COVID last year. And then our stimulus checks, many people have seen those already coming in. The EIDL changes, we want to update you on that. Other things that were in the act that might be pertinent to your business. And then I will kick it over to Chris, who's going to go over payroll related changes, the employee retention tax credit, and then let you know, how do we do these things? What's the right order? And then what's going to happen with your 2020 tax return? You've probably heard the IRS is going to hold off on accepting the individual returns into February, but what should we do with your business returns? And then what are the next steps that you should take both individually and for your business? And then we've got it open till 1:30, where we'll go over some closing thoughts and have live Q&A. So we're pretty excited about that part. So with that, we'll kick into the changes to the existing PPP loan, or we may call it the first draw. So for those of you that got PPP round one, we all got that good news that the PPP expenses are now going to be fully deductible. We were worried about that, doing tax plans both ways. The IRS got that fixed. Unfortunately, the state of Minnesota is not looking at it to conform yet, so we need to make sure we're working with our legislators on that. And then the expanded use of funds for the PPP loan proceeds that you have. You now can include PPE for your employees, upgrades that you had to do because of COVID to your facility, working from home software upgrades as you've had to send maybe employees home to work versus in your offices, any property damage if you had something happen due to the civil unrest that was happening all over the United States, and then various covered operations expenditures and supplier costs. And that's pretty big detailed list of what that is. So if you have questions, do reach out. The payroll cost now will also include the group life, disability, vision, and dental insurance payments that it didn't at first. And from the last webinar, we were thinking maybe that would be able to adjust your PPP draw one amount. It cannot, and I'll go into that in more detail on the next slide. And then that EIDL advance that we got, which was up to 10,000 or 1,000 per employee, is now going to be forgiven. So before, if you had applied for forgiveness, you had to pay that back. Don't worry, the SBA and the lenders are working through that. They're going to reconcile that to make sure you get that money back. If you've made payments on it, the bank will also be refunding that as well as any accrued interest on it. So be watching for that. That's going to be an automatic thing, not something you need to do. Your lender will reach out to you. And then the simple form is expanded now to all loans that are 150,000 or less to be able to get easier loan forgiveness. This form is not ready yet, so please do wait if your loan is smaller than that and you haven't applied. The SBA had 24 days from the date of enactment to prepare that. And now we talked about this in a few other webinars too, but just remember, everyone can choose that 24 or 8-week covered period when you go to apply for forgiveness. So you just want to look at which period makes most sense to make sure you're getting 100% forgiveness. Now, if you have not received forgiveness on your PPP loan, there is the ability, like I talked about, that request to get more first draw. So if you got your loan right away, and then as you followed our webinars, rules kept changing. It specifically changed for partnerships, seasonal employers, and then farmers and ranchers. You now can go back and request that additional draw. It also will affect businesses who paid part of it or all of it back due to the rules changing, or maybe you chose not to accept the full amount of the loan because you didn't think you could use it. You now can go back and get that. That will not be available until January 25th. But a kicker in this, you guys, is as I go into second draw loans, if you decide to go back and get more of your first draw, you cannot apply for second draw until your first draw loan proceeds are used. So again, be aware, if you're going to apply for more on first draw, you have to wait to get second draw until those are used. And if you decided you weren't sure with the rules and regulations and you just didn't get the PPP first draw at all, you now can go back and submit an application to get that first draw. And they just released that new application for us on January 8th. And notice that's Form 2483. And now accounting for those existing loans that we all have, things have changed. Well, the good news is we get to have 501c6s now go back and get those PPP loans. So that's a big deal. We say some because if you had too many lobbying expenses, you cannot get it. So be aware of those rules. We can help you with that if you're unsure. And as you use those PPP loan funds, you really just were accounting for all of your expenses like you always would. You'll be debiting your expenses and crediting your cash account using those PPP funds. The loan needs to be recorded. A lot of people maybe have said, we have this separate bank account. We don't have it on our books yet. What should we do? You'll want to set up that new bank account, deposit it into the account, and set up the long-term liability, which will be a balance sheet item. Unless it got forgiven, then you'll be adjusting it. So now note, when you get the forgiveness letter from the SBA and you get full forgiveness of these loans, for income tax purposes, we want to record that debt forgiveness income to wipe out that long-term PPP loan liability. And we're hoping to do this on December 31st of 20. So we may have to extend tax returns this year. This doesn't mean we don't want to do them. I think this year, more importantly than any other, make sure you get your books closed up for 20, get that information over to us because we need it for a lot of these COVID things and just to make sure everything's squared away. So just know that there may be an extension, but we will definitely work closely with you if that's needed. And then the PPP debt forgiveness income is tax exempt. So that'll make some book tax differences on your return, but we will help with that. And again, I want to note that Minnesota is not conformed yet. The forgiveness income will be taxable. Again, that's as of right now. So we want to make sure we're working with our legislators. And now to make sure I save time for Chris at the end, the accounting related to GAAP are all going to be different. I went over this on the last webinar. So this will be in the slides for you as well as the second one. Again, reach out if you're unsure what you should do. We're here to help. Now that gets us into probably what a lot of you are on here for today is the second draw PPP loans. This one is the 25% decline in revenue for any one quarter of 2020. And you're going to compare that 2020 quarter to 2019. So you also can choose an annual. So you could look at full 2020 against full 2019. Obviously, it'll be much harder to show that than it will be quarter to quarter. If you weren't in business at the end of 2019 and didn't start until 2020, you'll have to have been in business by February 15th. But to show this decline, you'll be using quarter 1, 2020 to compare to quarter 2, 3, or 4. So again, if you have questions or uncertain on this, do reach out. Now, guys, the other big things is the and, right? I have and show the necessity that you need this loan to be able to operate your business. So remember, back in March, we were all worried about the pandemic, not sure what was COVID going to do, were we going to stay shut down forever? So the economic uncertainty was definitely there. And now we've been operating our businesses. Some people luckily really picked up in third and fourth quarter and had great years. So we just want to make sure that showing necessity of loan to operate the business is going to be key, and I'll go into more detail on that. They did kick out the application for this as well. Also on January 8th, notice the form number is the same. It just has that -SD for second draw. So to be able to get this, another stipulation is you have to have received PPP1, so the very first loan, and you have to have used it. So if you still have some of those funds available, you need to use them. And if you haven't, get them used quickly. But you do not have to have it required that it's forgiven. There may be part of it that's not. That's okay. And you do not have to have applied for forgiveness. Beware though, a lot of lenders might be using this as leverage to get you to apply for forgiveness on the first one before they will release second round draws. So be sure to reach out to us if that happens, because that's not necessary, and maybe we could connect you with another one of our lenders. Last time we could get up to that 10 million per borrower. This time on the second draw, they're limiting that to 2 million. And then the same calculation for most businesses is still the 2.5 times the monthly payroll calculation. You can use either 2019 payroll or 2020. A lot of times 2019 more than likely will be the higher amount because 2020 business was affected so greatly. But if you're a newer business and 2020 is higher, by all means, be sure you're using that. Good news, you guys, for our accommodation and food services sector who really got hit, and we've seen it here in Minnesota where they keep getting shut down. They actually now get to calculate that monthly average payroll and take it times 3.5 times. So that's going to be good news for all of them. And now the 8 and 24 weeks, remember I talked about it on that first slide for the change to the first one. We got to choose one or the other. So we had that alternative covered period as well. This time, great news, you get to choose any time between 8 weeks and 24 weeks. So you're going to calculate the use of the funds, and once those funds are used, that's just going to be the amount of time that you're going to submit. That'll help with the FTE counts, if you have to lay people off or anything. So I like this aspect in that we can definitely have more control over how we're using those funds and when we're done using them. Another eligibility piece on second draw is you have to have 300 employees or less. So that changed from 500. The payroll spend's the same. It's at 60% must be on payroll, and then the rest can be on the other expenses. And then the FTE reduction and the wage reduction still apply in this case. But again, we have up to that 24 weeks. So these are less of an issue this time around. We know up front that tax-free forgiveness on the federal side and the deductible expenses will be allowed. We know that going into it, so it's less of an unknown this time. The simplified forgiveness method for the applications for under 150 still applies. So do know that it's going to be a lot easier if you have a smaller loan. And then we have up until March 31st to apply for these second draw PPP loans. So the SBA started accepting these applications last week. The first 2 days were for those first draw loans where they hadn't gotten them, and then also for underserved communities and really small lenders. And then January 13th was that second draw date that it opened. And then on Friday, the lenders that had under 1 billion in assets were able to start accepting. So I've gotten questions today, oh I haven't heard anything from my banker yet. Well, it's because their assets are probably too large. Good news is tomorrow is the date that can open. It doesn't mean that your bank's going to be ready. So you still have to wait for them to let you know that they're accepting applications. The money allocated to the PPP program, the $284 billion, isn't expected to run out quickly this time. I was on with the SBA last week, and he said they really are figuring that it should last for a while. So make sure you really plan for this and have a strategy around it before applying, because Chris is going to go into some details on the employee retention credit, which will be a big piece of when you want to get your PPP. So now let's go back to that loan necessity piece, right? That's a big eligibility piece. So what the SBA is saying is we have this current economic uncertainty, which makes the loan request necessary to support our ongoing operations of the applicant. So again, the current economic uncertainty this time around is obviously much different than it was in March and April timeframe. And then to support our ongoing operations, we as business owners or as your advisors need to look at, can we pay our payroll? Can we pay our bills? So for those of you that have been following us and following these webinars, we know that in June, we all had a sigh of relief. The SBA put out this safe harbor that a business is deemed to make the certification in good faith as long as they had a PPP loan of less than $2 million. We have no idea at this point what's going to happen this time. The SBA has 45 days to put out guidance on what their audit program is going to look like. But the word on the street with all of us talking to different bankers and the connections that we have is that the SBA is planning to be looking at a lot more of these second draw loans than they did the first time. And we need to all remember these loans are released out to the public. So every dollar you get gets put on a list and anyone can see what you've gotten. And then you must make sure you're documenting why you deem it's necessary to support your business with this PPP loan and why you want it. And Randy's got a good blog out there on our COVID page to give you more information on that. And then each business owner needs to make this decision that if in good faith, you're able to sign off on all certifications and that you need this PPP draw 2 to be able to continue your business, that's going to be more on the business owner this time than us as the consultants until we know really what the guidance from the SBA is going to be. And we will definitely keep you posted as we get more information on that. Now let's go into an example for us on the second draw PPP loan. So in this one, we have a hair salon that has 20 employees. So their first loan was $200,000. They used all of it on payroll because they were able to use it over 24 weeks. Their second quarter revenue was down 40% when we looked at 2020 compared to 2019. And they documented why the loan is necessary to support their ongoing operations as COVID restrictions and things still stay in place. People are still maybe not going into the salon like they were before. They've decided that the qualifications are there for the second draw of the PPP. So now they can apply. They're at a bigger bank. They'll apply tomorrow. They're hopeful that it gets approved and funded by January 25th. I know it's been slow from what we've heard from bankers. The SBA isn't turning these second draw loans real quickly at this time yet, so it may take longer than that. But then they get to choose any time up to 24 weeks to use those funds, and they can spend it on payroll, rent, utilities, PPE, modifying their facilities, and those operational supplier expenses that we talked about. Now here's an example. If we had the same information, but it was a restaurant that got $200,000 the first time, remember, they get that 3.5 times. So on the second draw, they're eligible for $280,000. Now, another example, this one will go a little bit more into the necessity piece. We had a manufacturer that had 80 employees, so still under that 300. Their first PPP loan was $900,000. They were also able to use it all on payroll because of that 24 weeks. Their second quarter revenue was down 27%, so they just made it over that threshold when we looked at 2020 compared to 2019. But then third and fourth quarter were fully restored. Things were good. And now we looked at 2021. The outlook is looking good. Pipeline's great, looking like normal activity. What happened for them then is they had book income of $1.5 million for 2020, and then had that $900,000 of forgiveness from that first loan that was added in there. So their taxable income is $600,000. So as they're documenting maybe what their need is, they know that they now have business positive cash of that 1.5 million. They're going to need $200,000 to pay the taxes. So they'll have 1.3 million left cash. That's after tax profit for 2020. So again, we know that they qualify it based on the 25% decline because they were 27%. They have under the 300 employees, but do they meet the necessity certification? Here's the piece where the business owner will want to make sure they're documenting that and putting their reasoning for needing draw 2. Now, stimulus checks. These started coming out quickly after they signed that bill, $600 per adult and dependent child under 17, so $0 for any adult dependents like college kids. It could be adjusted. Everyone's probably seeing it in the news that they're talking about getting it to that $2,000 per person. That didn't happen after that Christmas week, but the Senate changing hands, I think will definitely have them looking at it again. And it won't mean 2,000 more. It'll be just that additional 1,400. Again, this is not in law at all, but it could be coming. And then I won't read through, but there are income limits, and then how they calculate it is really based on the tax returns. So 2020 will be another year that we're going to be maybe waiting on filing the return if the stimulus hasn't been received yet, but could be. Hopefully it's all taken care of by then, but we will be watching that for you. Now, EIDL. So the EIDL, just a quick overview on that before I go into my points, was both that advance and you could get the disaster recovery or disaster loan up to, it was, could have been based on your business dealings. Some people got, 500, 800,000, but then they limited to that 150,000. So again, there were two things happening. So the initial advance that was up to 10,000, and then they switched it to the 1,000 per employee, is now going to be forgiven and is not taxable income on the federal side. The SBA is going to create a process for the advance piece when you have already applied for forgiveness and your bank said, oh, you owe this 10 grand back, or maybe it was 2 grand, but that part will be worked out through the bank and the SBA. And then the other big thing is for those businesses who didn't get that full 10,000. So you were probably wondering from our first time, we're like, make sure you apply. The SBA says, don't apply. We're not even going to open it back up. Their plans are to email all the businesses who didn't get the $10,000 advance or didn't get the full amount. So if they had 3 employees and could still get another 7,000, but what they're going to be doing is starting with the low income communities first. So this is not something that's going to happen quickly. So just watch your email for that and know that it should be coming. The new enactment did not give us the option to get a second EIDL loan. So if you got the first one, that's the only one you're going to get. And just beware, there are a lot of stipulations with that loan, such as not being able to take shareholder distributions without prior approval. So that's been a big piece for a lot of clients that didn't know that when they got it. So just be aware of what you're going to do for tax distributions and getting the approval from the SBA if you need to do that. And then they also put in this targeted EIDL program for the hardest hit communities, which again, these are going to be the low income communities that have had 30% economic loss, and then only for businesses with less than 25 employees. So that may not affect a lot of people. So there were a lot of other items. So our group read and read and read these pages over and over, and we try to just pick out some of the bigger items here on these next 3 slides. So if you are a live venue operator, and our very own Minneapolis correspondence was the one getting this federal program going on the venue grants. So it was kind of fun to see that Minneapolis was involved, but they set aside $15 billion, and what these business operators can get is up to 45% of their 2019 gross revenue. So pretty big, but the key here is if you are one of those businesses, you need to choose between the venue grants or the PPP. So if you're uncertain of how that all works, do reach out on that. There's been an additional $10 billion to support child care providers, and then the extension on the eviction protection, and additional $25 billion for rental assistance for people who need it. And then they're changing the earned income tax and child tax credits. You're able to use your 2019 income, which is a big change. And then the SBA lending program, you guys, they have a lot of big changes to those that are really making them easier to get and might be the route your business wants to go or needs to go. So talk to your banker about that for sure. And then specifically on those SBA loans, the 7As, the 504s, the micro loans, you're going to see in February, so next month, that all of a sudden you're not having to make your loan payment again, or at least not up to $9,000. If your payment is more than that per month, you'll see a little bit coming out of your account. The government will be paying that for 3 more months. And actually for those that were harder hit, they'll get 5 additional months after that. And then if anyone's applying for a new 7A loan, there are 6 months for forgiveness on those. And then the extra 5 months, they listed a big grouping of NAICS codes, but really it's for the arts, restaurants, and hospitality industries. So do watch for that. That should definitely help out this year for 2021 to help the businesses make up some ground. We are very hopeful for that anyway. And then the debt forgiveness from the original 6 months from 2020 that got paid for you, we now know for federal purposes, those are also tax-free. So you're not going to have taxable income on those. And then the 179D, the commercial buildings energy efficiency tax deductions were made permanent. So for those of you that have taken advantage of those, that was great news. And then there were many other extenders for 2 or 5 years on tax items that we watch every year. For most of you, we just take care of that, but that was good news for us. And now a big thing that you've probably heard in the news over and over again, for your business, if you're purchasing meals now from a restaurant, and again, it's only meals from a restaurant, you'll be able to deduct those 100%. So we just added another meals category, right? Every third year, I feel like we've been telling you to add a meals or entertainment bucket. Now you'll have a meals 100% deductible will be only if purchased from a restaurant. And then for those of you that don't itemize, if you give charitable contributions, you can deduct up to 300 or 600 if married filing joint. And then for those of us that are doing our HSA, FSA unused benefits look for 2020, great news is you get to carry those over into 2021. And with that, we get to bring Chris on. I know he's been waiting and he's super excited to go over all things payroll.
Yeah, kind of stealing Barb's thunder here with the payroll, but we'll start off with just the federal unemployment benefits. So that's going to be 300 a week, and that's basically 11 additional weeks. And then there were some changes to the deferred payroll tax. Not a lot of businesses did that, but they pushed the timeline back just slightly on there. And then one change that is, I think, going to be useful is the paid sick leave credits. They have been extended into the first quarter. But the difference is for 2021, it is optional for the employers. So if you remember, this credit is basically, you get a credit when folks are out with COVID and you keep paying them. So that's the paid sick leave. And there's a whole bunch of other rules. We could probably do a half an hour on just that one credit, but it's been extended for one additional quarter. So a little bit of good news there. Now this is the big one, the employee retention tax credit. I know some people are calling it the employee retention credit. Once I put ERTC in my mind, there's really no going back. So I'm going to keep calling it the ERTC. And this is going to be huge, and there were huge changes to it. And as we were working through things last year, really nobody knew anything about this because nobody was claiming it and nobody was allowed to. And so now it's really a big effort because the new rules are that you can do both the PPP and the ERTC for 2020. So this is the big change. And then going forward in 2021, you'll also be able to do the PPP second draw, or even if you're doing first draw still, and the ERTC at the same time. So now that you can do both at the same time, everybody needs to sort of go back and examine this ERTC because I do think it's going to have a big impact on the businesses that were really impacted. And so what do we mean by those businesses? Well, a qualifying business has gross receipts that were down 50% in compared to the prior year. And so they look at it quarter by quarter by quarter, and you're looking for a 50% decline in gross receipts. So, I mean, if your business was down 50% in the second quarter, that's really a significant hit. So we're looking at non-essential businesses that were probably shut down or really greatly impacted at some point in 2020. You can do the gross receipts, and that looks at each quarter, and that's, I would say that's the best way to qualify, but it's not the only way. The other way to qualify is if your business was shut down. And so those rules are if your business was totally or partially shut down, meaning you had suspended your business operations due to the local government order. So when the governor says restaurants are closed, I think that's going to qualify. But when you are qualifying based on this determination, you need to look at it day by day. So you're only going to qualify for a period of days, maybe March 15th when shutdowns began through whatever the date is that your business got open again. The first way you can qualify an entire quarter at once. And then the second way, you're going to have to be looking at it by days. So I think there's going to be a lot of overlap. Certainly, like a restaurant was both shut down by government order for quite a while. And I think they can reasonably argue they've had partially suspended business operations for various points in time. But they also might meet the 50% gross receipts decline. And so you would sort of prefer to do the entire quarter at once based on the gross receipts. And as we'll see, that'll definitely help you in the subsequent quarters. But for 2020, this credit is, the qualifying wages are 10 grand per employee per year. The credit is 50%. So it's a $5,000 credit maximum per employee per year. So 5 grand per employee per year. The big caveat here is that you cannot use the same wages to calculate ERTC and the PPP loan forgiveness. So that kind of makes sense. It's double dipping. And you can't count those same wages for both. The idea makes sense. In practice, this is extremely complicated, and there are very few, if any, guidelines. And so I would say use extreme caution when actually trying to do the calculations. And that is something I'm going to say frequently in relation to this ERTC, is really to use extreme caution, because at least my opinion, this is the most complicated thing that we've had to deal with in the last year. I, for one, think this is going to be more complicated than PPP. And think of how many webinars and how much work we've done on PPP. For those who qualify, I think the ERTC is going to be more complicated, but I do think it's going to be worth it. So I've made a chart that probably no one can read as you're looking at your tablet, but you can find this on our website. There's a blog that goes along with it for 2020. The resources are posted on the COVID-19 page. So you can download it and go through it. But this is the simple step of the ERTC, and it's this convoluted flow chart. But this is the simple part, if you can believe it. You need to do this for each quarter. So you're going to go through this flow chart at least 4 times, once for every quarter in 2020, and perhaps you might even do it twice for the second quarter to see if you can qualify based on the gross receipts, in addition to just being closed. So the rules are different in 2020 compared to 2021, but so I understand this flow chart is difficult to read, but I mean, truly, this is the simple way to get started on the ERTC, just trying to figure out if you qualify or not. We'll go through an example here, and hopefully by the end of this ERTC, it'll make some sense. But keep in mind that, you know, I could probably go on and on and on about this for 4 hours, and we have maybe 20 minutes to talk about ERTC. But one example would be a non-essential business. You're closed March 15th through April 15th. You reopen, your gross receipts end up being down 65%, and then gross receipts go up, and they're maybe 80% of their prior quarters the rest of the year. So you're going to qualify for ERTC for the last 2 weeks of first quarter, so March 15th through March 30th. So that's qualifying based on the days. And then in the second quarter, you're going to qualify for the first 2 weeks based on being shut down based on the days, but you are not going to qualify based on the gross receipts, because your gross receipts ended up being 65% of the prior year. and that's more than that 50% threshold. So in this example, you get like 30 days worth of ERTC, but it ends up being in 2 different quarters. And this is really calculated on a quarter by quarter basis, but you will qualify at least for that period of about 30 days. In the second example, you're closed for that same 30 days, but the second quarter gross receipts are 45%. Third quarter, 75%. Fourth quarter, business is good again, you're at 105% of gross receipts. So if you go through the flow chart, and I understand I didn't talk about a lot of this in detail, but you are going to qualify for ERTC for that March 15th through March 30th. So first quarter, you got 2 weeks. Second quarter, you're going to qualify the entire quarter based on the gross receipts. The third quarter, you're going to end up qualifying the entire quarter because the prior quarter qualified and you were at less than 80%. You're going to end up qualifying the entire fourth quarter as well because the third quarter qualified and wasn't more than 80%. So I know that seems complicated and you know, it kind of is, but the flow chart will walk you through that sort of decision-making process. And that's how you can show that, you know, the entire fourth quarter qualifies. So in this example, ERTC is a go from March 15th through December 31st. So you got more than 3 quarters qualifying for the ERTC. The rules are different in 2021, but the rules are better. They are more generous. In many respects, it is easier to qualify and the credit is going to be more. And so again, this is really going to be important for people to understand going forward. It's great to qualify in reverse and you can amend and you can claim these refunds for the 2020, but now you can sort of include in your planning and your strategizing going forward because you know this is going to be around. So it's going to be around for the first and second quarter, 2021. And we know we can do the PPP and the ERTC at the same time. So they changed the rules, and rather than a 50% decline, now we're only going to need a 20% decline in revenue. So much easier to qualify that way. The partial or total shutdown rule still applies. So again, like a restaurant or something like that, that's can only do takeout for a period of time, that's probably gonna qualify. The qualifying wages, again, it's 10 grand, but now it's per quarter instead of per year. And the credit amount is 70% instead of 50%. So in 2020, your max credit was 5 grand per person per year. Now your max credit is 7 grand per person per quarter. So it's really 14 grand is on the table per person if you were going to qualify in both the first and second quarter. The size limit is much greater. So now you can be up to 500 FTEs, but of course that is a calculation based on your 2019 FTEs. So that's weird. And there's a 30-hour rule there. And so, you know, even calculating the FTEs could be challenging, but the credit potential here is much greater. And again, there's no double dipping allowed. And that's where we're going to see the complexity come. There's also an advanced credit. You know, I've said this ERTC is very complicated. It's the most complicated thing. The only way to make it worse is to claim it in advance. So unless your business is really, I think, knocking on the door of bankruptcy, I don't know that the advanced credit is that good of an idea. It makes the most complicated thing available like twice as complicated. But in theory, you can claim it as you go and then reconcile at the end of the quarter how much you qualified for versus how much you actually claimed. I think in practice, and we'll get into this in the example, I think in practice, you're going to need to wait until the end of the quarter, or you're going to want to wait until the end of the quarter to see how this works, to see how you're going to calculate it, and just do it that way. I think it's going to be easier. This is wildly complicated. I don't know that the advance is really going to get you much. You'll get the cash just a tiny bit sooner, but I'm not sure it's worth the hassle unless your business really desperately is in need of cash. And I would be looking at the PPP second draw if that's the case anyways. So I made another chart, and this chart is for 2021. So again, this chart is available on our website. You can look at it, and you're gonna have to do it for each quarter of 2021. So what I would be looking at is trying to project forward. How do I think quarter one of 2021 is gonna go? And maybe you don't have the final answer until the quarter's over, but it's going to be part of the strategy. It's going to be part of the planning. If you can identify your qualifications or how likely you are to qualify in 2021. And so again, this chart is small and seems messy, but this is the simple part of the ERTC. So our example, we got another non-essential business, and they're shut down January 1st through the middle of February. They end up having 75% gross receipts. You won't know that until the quarter's over, and then quarter two, you're gonna have 90% gross receipts compared to the prior year. So you qualify for the first 6 weeks based on partially suspended business operations. But then when the quarter is over, you can figure out that, oh, I met the gross receipts, so the entire first quarter is gonna qualify. In this example, the second quarter does not qualify because the gross receipts are higher and the business is no longer partially suspended or shut down. And again, like, you could do the advanced perhaps for that 6 weeks when you know you have some shutdown, but that is making something that's complicated even worse. So I might steer clear of that. So I've got a comprehensive, I call it comprehensive, but I know a real comprehensive example would take several hours, but I think we've tried to identify a lot of the key things here. And then we've got a list of 10 items in order to go through. So we got a hair salon with 300 grand PPP, FTE of 18, but a head count of 30 because there are a lot of part-time people. So they have plenty of payroll, but they also have rent during that 24-week period. So we want to look at the ERTC for 2020. It's, they were almost certainly shut down March 15th. So quarter one, we're going to have a couple of weeks that could potentially qualify for ERTC. ERTC second quarter, there's a decent chance we're going to qualify again because there's some shutdown time, and certainly the gross receipts took quite a beating in the second quarter. Third and fourth quarter, a little more iffy. Probably depends really on the gross receipts coming forward from second quarter. I think that's a fairly common scenario. Then we're going to look at ERTC in 2021. Again, they might be qualifying based on partial shutdown orders. It depends on the local guidance and the local rules. Based on what I've seen, most of them, although they're partially shut down, they may not sort of be meeting that 80% gross receipts anymore. I think in many cases, they'll be over that. And so really, you'd want to be looking closely at documenting and trying to figure out how much the shutdown orders are impacting business and if that's enough to qualify. They're going to be looking at a second draw PPP loan in all likelihood and thinking about it. Certainly, again, that second quarter, they're very likely to have a 25% decline in revenue. But as Stacy pointed out, and I will again emphasize, then we got to look at the necessity test. And do they meet the necessity right now? It doesn't matter if they met that necessity, last April when the world was very uncertain. But if you've sort of returned to normal business and your gross receipts are high, I think you really need to look closely and then document that necessity. and why this PPP second draw would be sort of required to keep the business going. So we know there's going to be some ERTC. We know that some ERTC is available for this non-essential business, in this case, a hair salon, but you cannot count the wages for both. So what do we want to do? We're going to want to count non-payroll costs towards the first round forgiveness. By doing that, we will free up more payroll to claim the ERTC worth. You want to be careful though, because the PPP is the first priority, because for every dollar of forgiveness, that's saving you $1 of cash. The ERTC is a 50-cent credit, so you're only saving 50 cents on the dollar. So you want to prioritize PPP first, but I want to preserve as much wages as I can so I can also claim some ERTC. And the way you do this is you amend 941s. You can do that within 3 years, but there's still definitely some guidance needed. So sort of based on that example, what do we do? I mean, I've said that the ERTC is wildly complicated, and I stand by that, but that's not sort of action items. So we tried to put together 10 steps, and they're in the order in which I would be looking at them. ERTC qualification by quarter for 2020. If the answer is yes, that you're going to qualify at any point in 2020, you want to put non-payroll costs on your forgiveness application if you've not yet applied. If you did already apply, we're not really sure how that's going to work. Maybe we'll still be able to count it, maybe not. But first step, if you have not submitted your first round PPP forgiveness, you want to immediately be looking at ERTC. And if you're going to get some ERTC, you definitely want to put non-payroll costs on there to preserve as much wages as you can. While you're looking at qualifying quarter by quarter for 2020, you want to project quarter by quarter for 2021. Are you projected to have this decline in gross receipts? Are you currently experiencing the local shutdown orders, or is your business sort of back to 100% and back to normal business? But these are the first two things I would be doing, is tackling that ridiculous pair of charts that we created. Then if you're considering a second draw, you need to determine and document the qualifications for that second draw. Both, you're going to need to document the 25% decline in gross receipts, but also the necessity. Document the necessity now before you apply. So 3 and 4 sort of go together. You also, if you're considering this PPP second draw, you really want to be intentional about planning the use of them, both the timing of when you want to apply and then how you're going to track those expenses going forward with the ERTC in mind. That's why you need to look at ERTC first, sort of step 2, and that will impact step 4 when you're planning the use of your second draw funds. After you've done 1 through 4, and really I would say only after you've done 1 through 4, do you actually want to, if you decide to go forward with a PPP second draw, do that. That's step number 5. I envision that happening this month, maybe next month. Certainly, the longer you wait, the more likely they are to run out of money, but hopefully we'll get some updates here after a week and we'll be able to see, are they on track to run out of money or not? Step 6 is apply for that first draw forgiveness. So as Stacy was saying, you do not need to apply for first draw forgiveness to get second draw. And I've seen a bunch of banks get this wrong in the last week. If the bank tells you your first draw forgiveness is required, they are wrong. And it's very clear in the information from the SBA that that is not required. So really you want to do 1 through 5 first, and then apply for that first draw forgiveness. You have plenty of time. So I'd say January through July of 2021, because really the deadline to apply for that first draw forgiveness, The earliest would be in July. Many are going to be in August of 2021. So you got time. You don't need to stress about trying to get that done in the next 4 days. Then, so now, I mean, look at the timeline here. We're in July now. We're in July, August, September. That's when we're going to actually tackle the calculations for the ERTC. And step 7 and 8, those are the most complicated steps. And I really think waiting until the 2 quarters are over is going to be key. By then, we should have some guidance, hopefully, on how it interacts with the PPP. And by then, I guess I might amend this even to say, after potentially your 24-week period is over for your second draw, if you get a second draw, I think you're going to want to wait for the 24 weeks to be over so you have full understanding of how the ERTC and the PPP are going to work together. And you won't have that until your full 24 weeks of information is available, even if then you choose an 11-week covered period. So 7 and 8 are the complicated ones, but I think in reality, we're going to be looking at these in the 3rd quarter of 2021, and those are going to be going backwards, amending, and claiming those refunds at that point. Keep in mind, there's going to be second draw forgiveness. That'll probably be in the fall of 2021. Not a real high priority, but then tax planning for 2021 is going to be a huge priority. And I'm optimistic it's going to go a little better than it did this year, because we know up front, this is tax exempt income. You can deduct the expenses. So we're not going to have quite as many scenarios, but you're going to have a lot of moving parts with the forgiveness, potentially large ERTCs flowing through the 2021 year. So tax planning will be huge, and there could be some unique opportunities for sure with that tax planning. So, I mean, these are really the 10 things that I would be looking at doing, and they're in a pretty strict order of importance and the timing as well. There's really no point in calculating the ERTC right now if you haven't submitted your first draw forgiveness yet. Like you need to do that first. So the ordering here is important, but I mean, yeah, this is going to take us all year to get through all of these things. So it's going to be we're in it for the long haul for sure. Filing a 2020 tax return. IRS recently said it'll be mid-February before they're accepting any individual returns. I think the processing could really take a long time, and some returns could be further delayed before you're allowed to submit it. So I would be looking at extensions. Be aware, it may take a while to get refunds. IRS is still trying to work out the stimulus checks and how maybe they're going to have some kind of a portal where you can look it up, or you're going to have to look up whether you got these stimulus checks or not. It's going to be kind of a mess. And I would expect significant delays potentially. I mean, what we've seen right now is the IRS has some paper filed returns that are 9 months old that they have not processed. So I don't think this is getting any better with the IRS. They are really, really behind the 8 ball. And that's just how this filing season is going to go. For individuals, the biggest thing is probably monitoring those stimulus checks and keeping track of them, because that'll go on your 2020 return and then it'll be all recalculated. If you end up having very low income for 2020, or perhaps you have a loss, like you have a Schedule C and you lost money this year, that's very common. You're going to lose out on some of those earned income credits, the child tax credit. Well, they're going to let you go back and use your 2019 income instead. So be aware of those couple of items that are going to be unique for 2020. For businesses, if you are affected, if you had a quarter that was down 25% or thereabouts, you really do need to be thinking about the second draw. You need to be thinking about the ERTC, how they're going to work together, and monitoring to keep up on, on our webinars, on the stuff we've put out on the blog. There will be a lot more information coming. The SBA is going to have more guidance I mean, they issue new guidance almost every day at this point. So it's coming fast and furious, and it's still going to come. So on that EIDL advance or that grant, the SBA is going to handle this, but you want to watch for that email if you did not get the full 10 grand. If you didn't get an EIDL loan and you want to, I would be careful about that. Probably talk to one of us. There are a lot of rules and regulations around those, but it's at least available. And then applying for the PPP first round forgiveness, certainly we can assist with that. But going back to my 10 steps there, step 1 is not apply for PPP first round forgiveness. If you haven't done it, it's worth looking at, but you really need to look at in conjunction with the ERTC. We have enough information this time around that we can plan and we can be strategic. And I really think you can improve your situation dramatically with some planning, as opposed to just getting it as quickly as possible and going at it sort of in a haphazard way. We've been very intentional about the order of those 10 steps, and that's how I would be looking at it if I owned a business that was affected or got a PPP loan or was thinking about getting one going forward. As I was talking about planning that use of the second draw funds, you can do some tax planning, and we have a lot more certainty going into it. I mean, don't get me wrong, there's still uncertainty and there's still going to be new rules coming out, but we have a much better handle on just the idea of how PPP works. We have a much better idea of what the qualifying expenses are. Now we know that ERTC is available, and that wasn't the case before. So there's just a whole host of more and better information that we have. And I think that's going to really allow for better planning and better use of funds going forward, because we do have a better understanding of how everything is going to work. Certainly, we are here to assist. The Tiger team has spent an incredible amount of time staying up on this, and we meet frequently to stay up on the latest guidance, but we can help with forgiveness applications, sort of applying for potentially the second draw, or looking at those scenarios to try and document your decline in revenue or calculate your payroll. You know, there are some choices there you can make. And certainly, you know, for the bigger loans, it's going to be especially important on that first round forgiveness. And I mean, even going forward, I would expect some SBA guidance that they're going to be looking at those larger loans in more detail. Second draw forgiveness applications eventually, the tax planning, consulting on the 7A loans. There's really, I mean, one of those things affects almost every business at this point. So we're here to help in any way that we can. Here's the full team. But I mean, I think that's it for the prepared remarks. Let's see. I mean, we've covered a lot of information in the last hour, but I have a hunch that, Nick, maybe there are some unanswered questions. Is that right? Or did we answer everyone's question in an hour?
Yeah, it's all clearer than it was when we hopped on. I know that actually. This is probably the 7th time I've heard you do this speech, and it's always a little clearer. So you just got to keep soaking this in. And yes, there are quite a few open questions. I will let you take a break since you got up at 4 a.m. on accident this morning, and you can just get hydrated and get ready for your when I get to spam you with questions. So Stacy, if I could have you turn your video back on, if the dial up down there will allow it. And let's get started. Going back now to PPP round 2. With the covered period for the second PPP, do I have to pick a covered period on the application, and am I held to that?
That's a great question. So all we talked about the first time, right, was covered period, 8 or 24 weeks. This time we get to choose. So we're going to say, hey, I use this up in 13 weeks. Here's my expenses. I have 100% forgiveness. I'm good to go. If you're uncertain and you have some FTE reductions or salary reductions and you might be limited, it might be best just to choose the 24 weeks again, just to make sure you're going to get that 100% forgiveness. Do reach out if you have questions as you work through that. We're glad to help with additional information.
And Chris just couldn't wait. Did you want to weigh in on that, or you? Okay, good. Just wanted to see your face more. On that EIDL advance, I know Chris kind of hit that again at the end, but just to clarify, if I only got $4,000 way back in April, how do I get the extra 6?
So the SBA from the webinar I did last week, they are not going to open up an application portal again. The application's already there. They know it's there. They're going to use the funds that are allocated for these advances to start with hardest hit communities and with businesses that are listed and have, a tax return and maybe didn't get it at all at first. Get that money out to them and then literally go through each business one by one and see, oh shoot, they only got 4,000 instead of 10, and start sending out emails. So you just have to watch your emails. If they ended up in your junk or spam, make sure you're watching that as well. So it's really, at this point, we're waiting on the SBA and you guys that it's not going to be fast. It'll be very low on their priority list now with these second draw loans coming through.
Great, and I hope we can get a sample of that letter or something, because that email, it sounds ripe for spam. I hope
Right.
it doesn't get copied or anything. What documentation is required for that 25% reduction?
So if you're under 150,000 for the loan to begin with, good news is you don't even have to fill that out when you apply. You just need to be keeping all your documentation for the forgiveness, or if the SBA asks for it. And you may have internal financial statements that you use. You could provide those. Some people maybe have point of sale systems that you can run reports out of, and you're just wanting to use the same documentation for how you're looking at 2019 and how you're looking at 2020. Will they come out with more guidance on what we need to give? Probably, but as of today, it's fairly generic on what's needed.
Okay, and kind of tying back into that, the amount of covered period, there we go. Can we just figure out how much or how long it took us to spend it and chop it off then, so that we can maximize the ERC that Chris is talking about?
Yes. And that's why we said we want to look at the ERC first, or ERTC. I mean, we got to give Chris that tax, that ERTC. Chris is going to leave it there because he's a tax guy. But yes, we want to make sure we're not putting more payroll on than's needed. And Chris alluded to, we're not sure what's going to happen. I know the AICPA is working really hard with the SBA to say, hey, you know what? Some of our clients were quick to apply for forgiveness just to make it easy. They threw all the payroll on there. We know they didn't need it. Can't you just let us allocate wages afterwards, even if we put them on the application? And they're pretty certain they're going to get that fixed as well. So again, these things are going to change by the minute. Good news is, when did Chris tell us we had to worry about that, Nick?
July.
Thank you. So we have
September.
time.
September.
Oh,
I was totally listening.
I mean, your second draw of forgiveness, you're going to pick your own covered period, but you're going to be picking it in like September, October, November. Like, this is not going to happen soon, because you're going to definitely want to run the entire 24 weeks. And so you'll be at least into July, but then you're going to want to do the ERTC ones first, and you probably won't get to the second draw forgiveness until later in the fall. So you get a good choice anywhere between 8 and 24 weeks, but you're not going to make that choice for quite a while.
Great.
And Chris, they don't have to worry, right? The forgiveness, we get 10 months after the end of whatever period we choose to apply. So I think it's a good conversation that we're having with all of you now. There really isn't anything that's hair on fire this time. I feel like we have time to think and plan. The SBA, haven't even seen an update. The last number I saw was like 1.3 billion maybe that they've allocated to those really small communities out of 284 billion. So there's nothing that you need to rush through. It's really, let's make the right business decisions for your businesses.
And that's a great point, Chris. Can we get that 10-step slide put up as a resource? I can already hear people asking me for that. I want that. And just if we could have that as a separate resource, I think that'd be really handy.
Yeah, we can do that. And when this does get posted, the video, it'll have a link to the PowerPoint slides there as well.
Awesome. So Stace, just a few more quick PPP ones, and then we can hop over to a few ERTCs. Do we include the original PPP round one forgiveness in any of our 25% down calculations, or how about any other government grants?
Nope, so that's pretty clear that it's not going to affect your income based on these grants and assistance you're getting, so you will not include those. I've just been telling everybody, put those down in other income, so then it's not in your top line revenue sales numbers anyway, and it makes it a lot cleaner if you are going to provide financial statements as your documentation.
Perfect. And last one for now is, if we filed our PPP loans with a different bank, can we still ask our accountant here to get clarification on PPP and ERTC?
So the good news is we are the consultants to guide and give answers. We will never be able to give anybody the access to an SBA portal to get loans. So we are really in tandem working as your team. So the banker's there to do the lending part. We're there to answer the questions and guide you. So yes, at any time you have questions or need things, all of our information's here on the screen. You obviously can go to your Boyum contact and they may connect you with one of us anyway, but we are here to help always.
Awesome. Thank you. And Chris, I'll jump over to a few ERTC ones, a couple easy ones. Can the ERTC be used for owner salary?
Yes, but not for relatives of owners.
Oh. And
As
relative.
weird as that sounds.
Okay, we'll maybe drop that and pick that up in case you have more detailed questions. Is it refundable?
Yes, it is. So it gets applied on your 941, but if the ERTC is more than the tax you paid in on your 941, they will refund it. But at this point, you're going to be amending them anyways. And so if your ERTC ends up being $72,000, like you're amending a payroll return that was already filed. So you're going to get a check, or perhaps several, because if it ends up being several quarters, but you'll get checks for the full amount. There's really no way it would be suspended or limited.
Great. And who does those amendments?
Well, the payroll company that filed them, in all likelihood, would be the ones amending. From what we've seen, I don't think the payroll companies are going to help you figure out if you qualify or not. I don't think, I've certainly not seen anything from the big payroll companies that comes anywhere close to those charts that I made. And I don't think and the charts are the easy part. The complicated part is looking at it in conjunction with your PPP. And so, yeah, the ADPs, Gustos, paychecks, they're not going to help you with that part. They're going to ask you, how much was your qualifying wages per employee? And it's all of the calculations that we need to do in order to have that answer.
All right. Does the ERTC apply to nonprofits?
I don't know.
I don't remember reading that either.
I don't know. Maybe Tiffany or someone else knows, but I'm sure we can find out.
Yeah, Tiffany, who is kind of our in-house legislator, and can write and read these convoluted bills better than most anybody, and she'll at least rival a good chunk of us, does a lot of specialty in nonprofits and many other areas. And she did unmute if she had an opinion.
Yeah, I would say that is something that we're still looking into to just get clarity.
Okay. One of the many things that we're still trying. Yeah, that's unfortunately the answer for so much right now, is we're still waiting to get good clarity on that. We are knocking out pretty much all of our questions. There's still a couple, so I'm still going to keep those, but just to let you know, if anybody else out there has more questions, please put them out. We'll definitely have time to get to them. Chris, is it a hard line of 25% difference in any one quarter of 2020 to compared to any one quarter of 2019, or is it a sliding scale?
Yeah, it's a hard line for sure. I was talking with a client maybe a week ago or so, she ended up having a quarter that was down like 25.5%. It was like, whew, she's, so she met that test, and it was because the business was just starting out in 19. So it was really an unusual situation. But I mean, what I would say is, yes, it is a hard line. You're going to need to have a financial statement or something that shows you were down the full 25%. But if you're coming real close to that line and you're only meeting it in one quarter, I think the next question is, do you meet the necessity test? And so like with a client I was working with a week ago, it was 25.5%. And then the other quarters did not qualify because the business was still growing compared to 19. And so it's really each situation on its own. But if you like narrowly squeak in for one quarter, I think you're really, especially in those situations, you need to take a close look at the necessity. Because if you were restored for like third and fourth quarter, then I don't know. It seems like more of an uphill battle the better your gross receipts were for the other quarters. But it is a hard line.
I was going to say that's a cliff, which is kind of rare in credits and things like that. But yeah, that is a true cliff where that next dollar could cost you a lot.
If it's 24%, you don't get it at all. And if it's 25%, you get to go on to the next qualification, which is the necessity test.
All right, got a couple more. I'm being told by my accountant that the payroll company should help me with the ERC. Is that true, or am I interpreting correctly that the CPAs is probably the ones that should help?
I guess we have not seen payroll companies attempt to assist people with the ERTC. I would be shocked, honestly, if they did, especially because of the interplay with the PPP and the double dipping. I mean, payroll companies don't know anything about PPP forgiveness or how those wages get counted, and they don't really want to be in that business of consulting on that. And so I would be very surprised if they did anything other than ask you how much your qualifying wages were and then throw it in. The amended return part isn't hard because all you need to do is type in the amount of qualifying wages. Multiplying by 50% is easy enough. The problem is figuring out what the qualifying wages are. That's the secret sauce.
And I would just piggyback that too, as I reached out to all the major payroll companies, and I had two of them ask me if I was inquiring about, it's called the WOTC credit, which is a whole different thing. They hadn't even heard of the ERTC. So pretty fair to say they're not really super focused on it internally. Does occupancy restrictions count in relation to the partial shutdown?
It might. I think that's a good question. It's really it's defined as a partial or entirely suspended business operations. It's like one sentence and that's all it says. And they have not really defined it well. I mean, obviously you think of like a movie theater is literally closed. Like, I don't know, that seems like they qualify. If a movie theater is permitted to be open, but instead of 200 people in a theater, they can only have 50, is that partially suspended business operations? I don't know. I would think probably, because they're really being hampered in terms of how much revenue they can create. And it's not their fault. If there are just rules about having to space people out, and if it turns out you have enough space that you maybe had to move some people around, but you're able to service the same number of customers you were before, it doesn't seem like you're partially suspended business operations. But this is definitely an area where there is no guidance, I would say, or very little. And it's something to keep an eye on. It's, I don't know. I think it's one of those, you'll know it when you see it. And if your gross receipts are 100% of the prior year, I don't know. It doesn't seem like you're partially suspended in most cases, but I don't know. It's hard to say. It'll depend on the specifics for sure.
Yeah. And quick one on the total headcount one. If we had 3 companies all owned by the same or very similar group of people, that each individual one has under 100 FTEs, but together they have more, can they still qualify for the ERTC? Are there grouping rules in the ERTC like there are for PPP?
Yeah, there are affiliate rules. Affiliate rules are really complicated.
We need another
That's
webinar just to go over those.
Yeah, I've said that phrase a lot today, but that's really complicated. But in 2020, the threshold is 100, but affiliate rules do apply. In 2021, it got raised to the 500. So it's possible you could have a situation where 2020, you were too big, but 2021, you were not too big anymore. And so that's another way that it got expanded for 2021.
And so anonymous attendee, feel free to reach out to Chris on that one. He is our ERTC expert, so he'd be happy to talk some specifics. All right, Stace, if I could have you hop back on for a little bit. I think we got a couple questions up for you now. Is there any programs for landlords with no W-2s?
Oh, you guys, that is the one area of clients, and we have a lot of them, that I haven't been jumping for joy having handouts to help you with what you can do. My best advice is, if you have financing, look at doing a refinance to an SBA loan if it makes sense, because they have really loosened up all those rules. A new loan, you get those 6 months of forgiven payments. And so it's not a ton, but it is something that'll help you. And then I'm very hopeful that the money they're allocating for these, rent payments, if you are renting to individuals, that you'll get some of your rent payments if you haven't. If it's commercial, let's just hope that these programs for PPP Draw 2 will get these companies the money needed so that they can use that to pay the rent to you. But other than that, there just hasn't been anything as of yet. Doesn't mean that it's not going to be, right? We're on COVID package 2, COVID package 3. I mean, it's already been talked about in the news. So we may be back with you sooner rather than later and might have something for you.
All right. If our financial statements that we did, it may be internally, but I guess it doesn't really matter either way. If the financial statements we keep are kept in 19, we're on a different method or we adopted a different rule change into 20, do we need to restate? Do we need to be on the same basis?
You do. So it has to be the same. And a lot of times you'll just follow what you did for your tax return. So if you're accrual basis, you'll do accrual. If you're tax basis, you'll do tax basis. But yes, it must be comparing the same accounting method year over year for those quarters.
Great. And one common question I think is just a tiny bit of people are getting confused between the application and then the forgiveness, because we all are, and now we have rounds 1 and 2. You mentioned that in applying for round 2, we can look at our 2019 payroll, or we could look at 20. Do we also get to look at items like rent, 401k, utilities, and mortgage? I just want to clear up that those are different.
Yes. So you guys, the payroll, as I was talking about, that you can use either 19 or 20, that's just calculating how much can you get for your PPP draw loan. Remember, it was a paycheck protection program. So to decide how much money you could get, it's all related to your payroll costs. The other expenses that are listed are just expenses that are approved of uses for those PPP monies. So again, it is 2 different things like Nick said. The front end is payroll costs, the back end is payroll, plus a lot of other expenses that they've opened up as appropriate uses.
Great. And one that actually kind of got answered, but that was good for the rest of the group. Randy's blog on the necessity of the PPP round 2, he is updating it. We do have one that had happened back in May that is still very applicable, but Randy is getting it updated, but just draft an impact statement, look at what's happening today or when you're applying, what's going on around you, your industry, just kind of everything you can to feel good about the need for this next round. Chris, another ERTC one popped in. And again, this one gets pretty specific, so I'm not positive that we'll know an answer on it. Oh, and sorry, super quick. This just in from Tiffany. Nonprofits are eligible for the ERTC, and that was a little collaboration research by Barb Sadi, our other payroll expert, and Tiffany Shermack, our in-house legislator. Okay, so is there any change to ERTC qualifications for employees who are not yours but hired externally, like staffing companies, PEOs, anything like that? Was there language on that in the bill?
Yes, but no. Yeah, hi, Dan. I was thinking of you when this happened. There were some changes. More guidance is needed because it's still not clear, because those staffing agencies have more than 500 employees. So on the one hand, it doesn't seem like they can get it. There have been some changes. I guess now we've gone from no, you can't get it, to maybe, which is a step in the right direction, I guess, but we're still at maybe. So to be determined, I would say. Yeah, that's one of the many areas where we're still in need of some actual rules.
Yeah. And good question on applying for the second round. And the first sentence I like, because I don't know anybody who would actually have this finalized. It says, if I haven't finalized my 2020 taxes, and trust me, you are not alone. I don't think anybody has yet. Maybe you mean your internal books, that could be. Should you just use your 2019 numbers to calculate, or so you're just going for the exact same amount of PPP, or how can we find out if we can get more under 2020?
Yeah, I mean, I think in many situations, your second draw loan will be the identical amount as your first draw loan. However, I do think there's still several caveats to that. One, depending on when you did it and what bank you used and the bank's understanding, a lot of banks made some small errors. Sometimes taxpayers made small errors in submitting them. So there's potentially a few different areas where you could have gotten not quite the right amount for the first loan. You can look at either 2019 or 2020 payroll. You know, if your 2020 payroll, if you think it might be a little bit higher, I think it's worth waiting to pull those reports for 2020. I mean, at the end of this month, all your 2020 payroll will be done, it'll be filed. So if it's not already done, I mean, it's already the 18th. I think a lot of those W-2s are already done. So the payroll reports would be able to be pulled for 2020 already. But if not, I mean, if there's any chance your 2020 payroll is going to be a little bit higher, I would wait until it's ready. Waiting a week or 2 weeks to apply for PPP second draw is going to make a ton of sense, because if there's a possibility that your 2020 was a little bit higher and that results in you getting an extra 20 grand, 50 grand of PPP, I certainly think waiting a week or two to make sure you have the right information would be well worth it.
And you're definitely right. Most every processor I've seen already has all the reports out that you would need for that. Of course, if you do it on your own or using one of the more manual processors, they might not, but you could probably push them and they can get that stuff out for you, because it's important. Want to get in queue for that for sure. It looks like we've solved everybody's problems. Nobody's going to have any questions on this. I'm so happy. That's an impressive feat to be done. So I'll just let Chris and Stacy say bye and do our final little plug.
Perfect. Thanks again, everybody, for being with us. As I said, this is going to be changing all the time. We'll make sure we're keeping our blogs as up to date as we can and have the next webinar as soon as it makes sense. But anything that's needed, reach out. That's what we're here for, to help you. I know a lot of people know that we're coming into tax season and, you know, always say, oh, I'm sorry, you're busy. Don't be sorry. Reach out. That's what we're here to do, to help. So again, thank you from all of us here at Boyum and from both the partners and the COVID team.